Good afternoon, ladies and gentlemen. Welcome back to the Fiscal Philosophy YouTube channel. This is my latest buy, TSS Inc. or TSSI. It's a small cap, and, well, buckle up for volatility. That's what that means. Experienced the same thing with my investment in High Tide last year, but overall, in the time I've owned it, it has worked out well. I'm hopeful that this small cap will perform similarly for me. This company basically provides for the needs of companies trying to build data centers. And this is important because a lot of very large companies are making big capital expenditures in the area of data and AI in the coming years, which that's great. And they do that expecting a return. But if you think that maybe this is potentially a bubble and that there's a chance that some of them will overspend on it, rather than investing your money in them, those being many mega caps that are in the hundreds of billions or even trillions in market cap, and for them growing is a lot harder, why not try to invest in companies that are much smaller, but who will be the recipients of a lot of that new spending on data and AI? And this company seems very well positioned to be one of those companies. When it comes to investing in small caps, I like to be cognizant of actual risk. In terms of risk, I mean a total and permanent loss of capital. How likely is that to occur? Versus the likelihood that there is a period of continued growth and an outsized return. In this case, I just like to look at the balance sheet as one factor, and net cash versus net or debt, if it's negative, is one thing that just gives me a very quick temperature check on how financially healthy this company is. And for the size of company that we're dealing with here, I think 42.5 million in net cash is a relatively good position. Now, they did announce that they're taking on, I believe, a $20 million term loan, but we'll get into that a little bit later. At the moment, though, it seems that they're at a pretty comfortable liquidity position at the moment, and that debt isn't going to be the thing that sinks them, at least anytime soon. The other question, of course, comes down to profitability, and especially per share profitability. Is this going in the right direction? And at least as of the last year or so, it appears to be going in the right direction. But furthermore, from what I have heard and looked at, it seems that they're guiding for things to keep going in this direction. And according to one person I know, their management does not guide for things that they don't consider to be basically 100% locked in terms of future business commitments. So the chances are that whatever they're guiding for, things could be even better. But their EPS is in the positives and going up, which, of course, you want to see. There's a lot of people who will throw money willy-nilly into the next big thing when they aren't showing any positive EPS at all, and that always worries me, right? Granted, sometimes you can find ones where it's really trending towards that direction, like maybe you're right on the cusp. Maybe the EPS is negative 1 cent, and you can tell that in the next quarter that they're going to start turning a profit, that kind of thing. I understand that, but I remember people investing in like basically any company if it said it was EV or related to the EV industry, regardless of how dismal and unprofitable the financials were. That's not what this is. But the stock price itself could be very volatile because it's around a 300 million market cap. So it doesn't take much buying or selling to really move that share price along in either direction. So what it comes down to is, have we found a reasonable point where the financials tell us a good story, and are we paying a reasonable price for where we think it's going in the next year or so? And in this case, it looks like it could be such an opportunity. Another factor I'm wanting to watch closely here is, of course, the share count. As you can see, it looks like over the last few years it's been up and down, but if we just look at 2024 versus where they ended 2023, there definitely was dilution. However, this dilution occurred as the stock price rocketed upwards, and in a lot of cases, uh, for a business that has the share price go up a lot very fast, taking on raising money with equity, that is selling shares rather than debt, can in a lot of cases be the wiser decision. And what did we look at earlier? We looked at what their net cash situation looked like, and it looks like they've kept debt minimal while keeping a good amount of cash in the bank, thanks to the run up in share price, which gives them a much healthier balance sheet that I think then if they do want to take on some strategic debt, well, they look financially healthier to any banks or anything like that. So they can probably get better terms on their debt because they went ahead and got cash while the getting was good, so to speak. However, this doesn't mean that it's still not worth it, because as we looked at before, the EPS is going up even though the share count is increasing. So they're not outpacing their profit growth with dilution, or at least not yet. I mean, it's very early days. That's the thing. But I'm fine with that because it does seem like it's being done what I think of as a deliberate and strategic fashion by their management. And there's one last little bit of intel I want to get into on this, but just before that, I would like to remind everyone that I have partnered with Moomoo, and if you wish to support the channel, you can use my exclusive link in the description below. Make a deposit, get some free stocks, get some bonus APY on a cash sweep account. All you got to do is follow my link in the description below, sign up for your account, download the app, do all that good stuff, and you can get all the perks and benefits as well as all the trading indicators and whatnot. Now, back to TSSI. So, in looking into this company, I found that about a month ago, there was this long-term lease for a larger factory to support accelerating demand, and it looks like there's a specific customer that they're basically trying to fulfill all this demand for. It's a very big customer, and the word on the street is that it's Dell, because the CEO of TSSI actually used to be a vice president over at Dell. So it makes sense that he would have the relationships there to sort of sell them. And I believe he was also some type of a VP or other high-level person at Oracle. But it seems like the consensus here is that Dell is probably the big customer. And just yesterday, they announced that they want to take on a $20 million debt financing to meet accelerating demand for AI-enabled technologies. Again, probably related to the same thing. And again, since we looked at their balance sheet and the direction that their EPS is going, and their net income is going the same direction as EPS, of course, probably $20 million of debt isn't something to be worried about, especially if that's specifically going to fulfill existing customer commitments over the next few quarters. If that's the case, then they should see a pretty good return on that $20 million, and that's good. You want, if they're taking on debt, you want it to be basically to grow the bottom line and not just to like kind of tread water and go nowhere. So again, it seems to be happening in a strategic and deliberate way, which is what you want to see. So I'd like to offer one last point on small caps generally. All of these little red circles are near peaks and valleys that have happened in the share price over the last 52 weeks. And I think for the most part, if you bought even at any of these peaks and held, it would have been okay. But one, that pattern is not guaranteed to continue. And two, when it's actually happening, I am sure that for a lot of stockholders, it sort of feels like, oh no, this thing could just keep on cratering, and that is true. But this is why I won't get into a small cap on just the word of a YouTuber or anyone else without taking a look at the financials myself and seeing the signs that it looks like they're in a good financial position and that the share price could actually be justified by actual business happening at the company, actual revenues coming in, actual profitability growing, and good management of their balance sheet, which I'm seeing the signs of those things, and those things aren't necessarily a panacea or a guarantee or anything like that either. The winds could shift on AI, and maybe a lot of those projected capex over the next year or so that were like 80 billion from Microsoft and all of that, maybe that ends up not happening the way everybody's projecting, and maybe the budgets for different companies to spend on products and services like what this company offers, maybe that evaporates sooner than expected or isn't as good as people think it could be, right? And that wouldn't be good. But I don't think it even necessarily has to be fully what people think for a company that's like $300 million right now to become a $1 billion company, a $2 billion company, something like that. Now, do I think this company is likely to become a $100 billion company? No, that seems a little outrageous, but I think it's much easier for a $300 million company to justify itself and scale and become worth a couple billion versus some of these juggernauts that are like $2 or $3 trillion becoming 10 trillion or 20 trillion, right? So this is where an investor that's prudent is probably more likely to get like a really, really outsized return. Granted, that is not guaranteed, and the market's always changing, and things can definitely go a different direction a lot faster than you expect. But I see a lot of positives here, and I'm willing to be invested in this in a reasonable and measured way in order to potentially realize a return that's commensurate with having to endure the volatility that comes with small caps. So that's where I'm at with that, and that's kind of my point. Let me know what you think, though, of course. As always, if you made it to the end, I do appreciate you. Make sure that you consider hopping into my Discord linked in the description, and also that you consider liking the video for the algorithm, subscribing to my channel, and helping me build my audience. Comment below if you are in this stock or any of the other ones that I mention on the channel. Be sure also to consider following me on the X platform at Mr. Macho Mog. I do believe I have that linked in the description as well. Always appreciate seeing my subscribers following me on there. Helps me a lot, helps me get the word out and grow my sort of minimum audience base for all the material I put out. Also, catch me every Saturday, 8 p.m. Eastern, Cashflow Kings Live. Take it easy, everyone, and have a wonderful Wednesday.